Okay, alright, we're looking at question 4. The following information has been collected from the records of Sheridan Enterprises Limited for the financial year ended 30th of June. And it looks like we've got a few items here. It says prepare a fully classified cash flow statement for the year ended 30th of June 2013. And there's another question which says Sheridan Enterprises approached you for a loan. Taking into consideration the cash flow statement you have just prepared, would you advance them a loan? Well, first we need to prepare a cash flow statement. Now when we're preparing a cash flow statement, what's the classifications that we do? Because we need to classify again. What do we classify into for cash flow? So we've got operating, financing, investing. Non-cash as well. Very well done. Non-cash. So we've got a non-cash item as well. So not every item will be cash. So now we need to determine which ones we're going to include into our cash flow statement, which will be these, and which ones we won't. We also have a cash item as well, which is balances. Okay, let's do it. Cash at bank at the 30th of June, well that's a cash item, but we don't have an answer for it just yet, so we'll have to work that one out. What about interest paid? What classification? Operating, yeah, I agree. Dividends received from TBL Limited. Yeah, it can be investing or operating. Profit made from the sale of machinery. This is a word that indicates to me it's not cash. Non-cash. Profit doesn't indicate cash flow. Profit is the difference between my sales proceeds and my expenses. Cash at bank for the first of July is my cash item. What about depreciation for the year?
Non-cash.
Yeah, non-cash. Payment for the purchase of new motor vehicles? Investing, yeah, it's non-current assets. Loan repayments made? Yeah, financing. Income tax paid? Operating, yep. Cash received from the sale of machinery? Investing, yeah, it's an investing inflow. Cash sales? Operating. Cash received from accounts receivable? Yeah, operating. Payments to suppliers? Operating again. Credit sales for the year? Non-cash. Money borrowed from RMIT Bank? Yep, financing. And purchase of property and land for cash? Investing. Alright, so now we've classified all of them, we've done the hard work. Now we just have to do our cash flow statement. What's the first thing I need to do when I'm preparing a cash flow statement? No, before operating activities. Title. Cash flow statement for Sheridan Enterprises. Pardon me. Yep. For the year ending 30th of the 6th, 30th of June, 2013. And next I've got my operating activities. So I've got operating. I'm going to start with some cash inflows. First I'll tick off my non-cash items, so I don't try and include them anywhere else. Now I've got my cash sales and my cash received from accounts receivable. I'll just call that cash from customers. And I'm going to add these two figures together. 150 plus 550 makes 700,000. My next will be payments to my suppliers. My payments to suppliers will be 675. And I'll bracket that figure to indicate it's a cash outflow. So I don't add them together, I take one away from the other. What other operating? I've got some income taxes here. Yeah. So my income tax paid is 85,000. Once again it's paid, so I'm going to indicate that's paid by an outflow using brackets. And I'll tick that one off. Interest paid. My interest paid is 6,000. Oh no, hang on. No, it's not. It's 2,500. Thank you very much. And I'm going to indicate paid by using brackets. And I'm going to put my dividends in operating. You could put it in investing, it's not wrong, but I'm just going to put it in operating. Dividends, and they're dividends received. And my dividends received is 6,000, which will indicate to me that's cash inflow. So now I need to get a total for my operating activities. Who's fast on the calculator that can calculate that for me? $25, 60, 54, 56,500, and it's outflow. So we've got a negative operating outflow. Which is the next one I do? Financing, investing. Which one should I do? Okay, we'll do investing. So my investing activities, I'll tick that one off. My first investing activity is a payment for the purchase of a new motor vehicle. Motor vehicle purchase 55,000, and it's a payment, so it's an outflow. I'm going to bracket it. My next one is cash received from the sale of machinery. We call that proceeds of machinery. And it's 100,000, so that's a cash inflow. Any other investing? Purchase some more property. Purchase, and it's 550,000, and that's an outflow as well. Alright, so now I need to, is there any others? I don't think there is. Nope, that's it. So now I need a total here. What's that? 450, 505,000 outflow. So I've got an outflow in my investing activities, which is normal. And my last is financing. Financing. So my financing activities, let's have a quick look. Cash. Financing loan repayments. $65,000. Now obviously repaid means cash outflow, so bracket. And money borrowed from RMIT Bank. Loan proceeds is inflow of 650,000. Is there any other there? No, I've just got cash balances. So what have I got? I've got 585,000, 585, and that'll be inflow. So my net cash flow now, so my net cash flow is the sum of all my cash flows. So that's an outflow, outflow, inflow. So how much? That's 561,500 minus 85,000. 6185 is 23,500, and it is an inflow. So it's a non-bracketed figure. Now I need to confirm my bank balances, so I need to add that to the cash at beginning. Start, or beginning, which was on the 1st of July 2012, of the 7th, 2012, and how much was it? It was 35,000, and this should equal my cash at the end. Which will be the 30th of June, 30th of the 6th, 2013. So I can tick that one off. I don't know what that answer is, and the reason why I do that is so you don't get the wrong answer, which makes 58,500, which is my balance. Now part B. So we've prepared our cash flow statement, and my part B says Sheridan Enterprises has approached you for a loan. Taking into consideration the cash flow statement you have just prepared, would you advance him a loan? Give reasons. Now, what we're looking here for is warning signs. What are my warning signs? Well, first things first, I need to look at my negative operating cash flow. So I've got a warning sign. I've got a negative operating cash flow. It's the first warning sign. My second warning sign would be my financing activities. I'm borrowing money here. I borrowed 650,000. Now that should have been used to buy property, plant and equipment. And I can see that I've borrowed 650, but I've only had a outflow of 505. So I've used some of this money to prop up my operation. So financing used for operating activities. And my third warning sign is I'm selling machinery here. I've made a sale of machinery, but I'm not replacing it. So not replacing assets, and I'll just put in machinery. So if we keep selling non-current assets, what are we going to use to make money? So would I advance a loan? No, for the reasons above. Warning signs.